Hello, everyone. Welcome to SeniorOpedia. My name is Viraf Balawala. I'm your host for today's episode, and I have with me Selene Hernandez, who is a mortgage broker with Groves Capital, and she's going to talk to us today about reverse mortgages. Welcome, Selene. How are you?
Thank you. I'm good. Thank you for asking and thank you for the invitation.
Well, so you are a mortgage broker. And so explain that a little bit in terms of a role, and then we're going to get on to the topic of reverse mortgages and how that impacts people's lives.
Sure, I'll be happy to. So, I'm a licensed loan officer in the US, United States, and I work for a mortgage broking firm called Groves Capital. So, what does that mean? When we broker, think of it as a real estate agent that you can go with to help you buy your home. And they work for a broker firm, meaning that they have access and they can work with, in my case, any lending company or mortgage bank. So I was with a national bank before. I spent 23 years of my life in that business, right? So I worked in credit cards, mortgages, and mortgage lending. So I could only do loans for that bank. Now, as a mortgage broker, I have access to more than 300 mortgage companies that could be banks, private money, commercial lending, all kinds of finance venues and on options for my clients. So it really depends on what the customer's needs are, and I can shop around.
So the benefit of the shopping around is that, first of all, they don't have to do it, where they might go to a couple of different banks at best, whereas they give you the information. This is what I'm looking for. This is the situation. And then you can kind of blast it out to, as you said, 300 different potential lenders to say, okay, who wants this deal? And that allows you to provide a better rate structure. How does that work?
Correct. So not only can I shop for the best rate, I can also look for the best terms. So what does
Mm.
that mean? What benefits the customer the most and what is the customer most interested in? And the most important thing is the qualification piece. So my job is to make sure the customer meets the criteria to qualify for a purchase, refinance, a cash out, to make sure that they meet the guidelines, find the best lender with the best terms, the best rate, the best scenario option for the client. And then I offer two or three options for the client on the rates or the broker, the actual mortgage company. And I just give them options and I let the customer choose. These are the best options for you, depending on what the client is trying to accomplish.
Okay. And you said that this is in the United States that you're licensed. I believe you're licensed in Florida and a couple of other states, right?
Yes, I am licensed in Texas, Arizona, Nashville, and then my company is licensed in pretty much all the states. Some states, for example, for a product called DSCR, which is an investment product where you buy an investment company or land, house, and your rent covers your mortgage payment. We have a loan with good credit and equity, right? So this type of loan does not require a license. So that opens up the whole country. But as far as Groves is concerned, yes, I am through Groves licensed pretty much in all the states. But for myself, it would just be those three states.
Okay. The things that we talk about today with regards to these reverse mortgages, would the principles of that apply both in Canada and the US? Because we have viewers in both countries.
Yes, I'm sure they're very similar. The goal of a reverse mortgage is that a client can access the equity that's already in the home and be able to use the funds any way they like. There's no limits on what they can use it for. They can use it for investment, home repairs, paying for
Mhm.
kids, grandchildren's tuition. By the time, and this is of course, with individuals that are close to retirement age or at retirement age, depending on the state and the country they live in.
Okay, so there's an age limit before you can actually do this?
Yes.
Okay.
Minimum is 55 in some states, 60 or 62 in others. Canada may be a little bit different, but yes, that is the age, like the minimum age. And then from there, we look at the equity in the home, how much can they want to take out, and then there is no payment back, which is the beautiful thing about this product is that it does not have to be paid back as far as monthly payments or anything like that. What happens is at the end of the cycle, whether the home is sold or the bar no longer lives in it, or one of all bars pass away, at that point, the house is then sold at the value of the property at the time that it is being sold, and then it's paid, the mortgage is paid back.
Along
So
with any
that
sort
is
of interest and whatnot at that point. So, okay.
correct.
So unlike a conventional mortgage where you're paying interest and principal along the way, this one you're not making any payments. So I'm able to use the money however I want. I'm not making any payment back. And then whenever the thing is sold, that interest has been accumulating. And so now
Yes,
here's your sort of amortized balance.
correct, correct.
Okay.
This is why it's called reverse mortgage, because you're not paying down the principal or the interest. It's actually the interest is accumulating. The principal will always stay the same. The interest is what's accumulating, but you also want to keep in mind that it will never be sold, or the debt can never be more than what the home is worth.
Okay.
So you can't be upside down. So in the case that you owe more than what the mortgage is actually, or the house is actually worth, your debt is bigger, it doesn't matter. It'll come down. Like it'll be what the house is worth at the time of selling.
Hmm. So because SeniorOpedia is all about seniors and caregivers, this would be a pretty good option, I would think, because as we get older, we go into retirement, we no longer have that sort of income stream coming in, and we can use this equity to fund and maintain that same lifestyle. Is that the essence of it?
Correct. Correct.
Okay.
Exactly. You can use it to pay medical bills, your anything, additions, vacations. You can even invest. I want to go back to investing because you could take the money and invest in other engines to get even more income back to you to
Okay.
sustain or extend your living expenses and more.
So let me ask you this. If I go through this process, I've now got, let's say, $100,000, $200,000 worth of equity in my home. I now pull that out. Can I actually use that equity to invest back into other mortgages for people? So I'm getting
Yeah,
a
you could buy another
ongoing revenue
house.
stream. Are there any tax implications for this? Okay. So I pull my 100 or $200,000 worth of equity out of my home. It's not taxed at that point, but then whatever I use it for generating the income, that income may end up being taxed.
Correct,
No,
correct.
wow.
Just like in any investment that we do, it's important to talk to our tax advisor to see what the implications are. And there's ways to be able to work with the investment, and if you were to sell it within a certain time frame or et cetera, you don't, or you reinvest it. If you keep reinvesting, that's also another way to be able to manage some of those expenses.
Do this on a regular basis. Why isn't it better known?
Right. It's like one of those things, right? We're not taught in school how to take care of our credit. We're not taught how to invest or what to do with our money. We're just not, it's just not part of what we're taught, or and our parents weren't either. So it's those things we have to learn as we go through life, and talking to someone like myself. And this is why we're on here, right? To help educate and bring
Mm.
awareness. So it's an opportunity for anyone within those parameters. If they want to reach out, they can talk to me or talk to their local bank and find out what their options are.
Do the banks actually push this? Because I've always felt that they're pushing more of the conventional mortgages versus the
Right, right.
rentals.
Yeah, this is one of the reasons why I left the banks, because there's very traditional banking, right? The major banks that we know of w- don't do these type of products. There's so many products out there that I didn't even know when I worked at the bank, but when I started hearing about them, I'm like, I want to do that. That's a much better solution for my clients. It could change someone's life,
Sure.
especially in the elderly years when we're struggling. The income reduces, there's not a lot of resources. We know Social Security isn't doing its job, or it could even potentially go away at some point. And if we haven't planned correctly, or life happens and we have to use that money, and now we're left without it. So this is a great solution and a great option. So this is why I'm here, helping
For
to
one
spread
of
the
our
word.
episodes, we had a fan reach out to us and say, when you go through that retirement phase, you no longer have that income stream coming in. How do I maintain my standard of living? And I think this would be a great option.
Absolutely. Absolutely. Yes. So you could, like I said, spread it out or take it as a lump sum and put it to work. So you get more income. Actually, when we leave our equity in our homes, it's locked, right? We have no access to it.
Right.
But when we take the equity out, it becomes accessible. Now it's fluid and we can keep returning the investment on that equity that we're putting to good use.
And that equity is continuing to grow, then it seems, because the property is still more or less in my name. And if I live for another 10 years, the property value still increases, but I just have to pay back the amount of the loan plus interest. But if that property continues to go up in value by another $100,000, $200,000 or whatever, then my estate, if I either sell or if I pass away, my estate actually gets the is the beneficiary of that increase in equity, correct?
Of course, yes.
Wow. That is
Absolutely.
amazing. That is amazing. So thank you
It
very
is.
much for the insight on this. Just one last question before I ask you where people can get a hold of you. So if I have this situation that's happening, is the interest rate that is charged, is that higher than normal? Because obviously, somebody's got to wait for the money to come back until I sell the home or I pass away.
Yes, no, they're very the same as all the other loans. And of course, it varies from lender to lender and the market conditions, right? So we
Mhm.
know right now the rates are higher than they've been, at least since I've been in the industry, and it's been like 20 years. So yeah, no, they are fixed. Once we lock it in, it's fixed. It's not going to increase. It's not a variable rate. So they're the norm, right? Between 7 and 8% right now in the
Wow.
US
Okay.
and at
Right.
today's market.
Thank you.
2025. So depending on when they hear this podcast, never know, the market can change completely.
That's right. Just what the Fed does, right?
Exactly. Which we never know.
So how can people get a hold of you?
Okay, I'm gonna give you my work number and I just want to read it to you so I don't mess it up. It's 615-375-6181. That's 615 area code +1 615-375-6181. My email, it's Selene, Selene at Groves, Groves, grovescapital.com. So capital, the normal spelling. And the other thing I also want to mention before I forget is that I also do foreign investment loans. So if you live in Canada and you want to buy a property in the US as an investment or even as a primary, if you want to move to the US, then I can help you as well.
Oh, that's fantastic. That's fantastic. Well, hopefully you never know. Maybe we'll be looking at a property in Florida or something like that at some point, and we'll
Yes,
certainly give you a call.
absolutely. Thank you.
Thank you very much for your time and your expertise and sharing, Celine.
Thank you so much for inviting me. So happy to be here today and I wish you all the best. And anyone who's listening and has questions, just reach out.
All right.
I'm available for you, everyone.
Thank you very much.
Thank
Take
you.
care.
Thank you. Thank you, everyone. Bye.
Now, there's two things that I do want to really point out here. First is that the amount of the mortgage or the amount of the loan that you actually get is never going to be 100% of the full market value of the home. It's going to be probably somewhere in the 60, 70% range. Just like when you were taking out a mortgage, a regular mortgage, they're going to require you to have a certain amount of equity, and the same thing applies here. The second is that there is interest accumulating and compounding not only on the principal amount of that mortgage, but also on the interest that is accumulating on that. So as a result, you are paying a bit of interest upon interest. However, the full amount of payback can never be more than what the full market value of their home is.
If you like this episode, then subscribe, like, share, and most importantly, register for upcoming notifications at SeniorOpedia.com.